in review. We're going to be looking at the trading week of February 2nd, 2026. We are out of the first month of trading. We're opening the second month of trading. I hope everybody did well in the first month. Obviously, it was a fairly up and down month. We had two-sided tape. Both, basically the entire month was two-way trading. Some really nice opportunities, some really difficult conditions we had. But as far as, the month overall, at least for me, I closed the month on the personal account up about 5.5%, which is not too bad. Definitely could have been better. But as far as my level of risk tolerance and the fact that this is my income, I do this for a living. I'm fine with how I did, and I'm aiming a little bit higher in February, and hopefully we get some continuation of some of the volatility, because it has been nice. It's been difficult at times, but it has been nice. So going into the new monthly open on Monday, we have some data this week. We don't have anything major until the end of the week, but getting into this quickly, we have 9:45 a.m. ISM, 10 a.m. PMI, Bostic speaking at 12:30. Tuesday, we have JOLTS at 10 a.m. And then Wednesday, we have the ADP employment report at 8:15, 9:45 services PMI, 10 a.m. services, or ISM services, pardon me. And then Thursday, we have jobless claims at 8:30 a.m. Friday is the bigger day with NFP and the unemployment rate, as well as consumer sentiment and the inflation expectations. So 8:30 a.m. NFP. And the unemployment rate. So we'll have to see if there's any volatility around those. As far as earnings, we've got some big ones. Monday after close, we have Palantir. Tuesday before open, PayPal and Pepsi, as well as Pfizer and Merck if you're interested in the healthcare space. After close, a big one will be AMD as well as SMCI. AMD will be big for the chip space. Be interesting to see how they're reporting. Wednesday before open, we have Uber and LLY again for the healthcare space for Eli Lilly. And then Wednesday after close, obviously a big one will be Google and then Qualcomm. Thursday after close, we have Amazon as well as MicroStrategy if you're interested in that. But obviously Amazon, Google will be big. AMD, Alphabet, Amazon, and to a lesser extent probably Qualcomm will be the big ones this week, as well as potentially SMCI. But I think it's going to be more of these guys here. So Thursday, Friday, Wednesday to Friday will be big as far as potential headline risk, as well as anything coming out of the government this week. I'm not sure. So the shutdown happened on Friday. It's supposed to reopen on Monday. It should be a nothing burger. But as far as headline risk, I think there is potential headline risk this week too, as we see some potential escalations in the Middle East. Oil is obviously ripping. We saw that last week. So just be aware of some of these things that could come out. You can't plan for those, obviously. You can't predict those types of things, but it's just one of those things where you have to be conscious of the fact that, we are in a current market regime, a current place, a current market regime, and a current administration where headline risk is very real. So just have to keep that in mind. As far as this week, new monthly open on Monday. Friday was interesting. So we'll talk a little bit about last week to start off. So we're on the ES futures, the S&P 500 here. I have a lot of lines on this, but I've just marked this out basically for the sake of showing areas of interest and general levels for this week. The daily, we set new all-time high. I'll start here. We set new all-time highs last week. So we were able to put in new all-time highs on the futures index. We were able to finally print 7,000 on the cash index on the S&P 500. We liquidated immediately after doing that. So Thursday we had a huge long liquidation day, a multi-distribution day down, which we recovered a lot of that. And then Friday was an absolute fucking blender, and we basically just filled in the liquidation day. We filled in this big down day, which is very common. If you don't get immediate continuation when you have big liquidation days like this, inside days and really choppy range conditions are usually what follow. So it was not surprising at all that we did something like this. Big picture right now. So the weekly is in balance, the daily is in balance, the monthly is one time framing higher. The positives for buyers right now is that value is overlapping and framing higher. So buyers are continually moving value higher on a weekly basis, or have been able to move value higher on a weekly basis, and finally basically print value above the prior all-time highs. So that is a positive. As far as how I'm looking at next week, I think the early indication of, up or down, basically, if there's a directional move, is how the inside day trades. So usually we have an inside day or inside week. I want to be playing, I want to be putting most of my time and effort around the extremes of that day. So we have obviously inside day high, inside day low, basically pinned inside of this liquidation day range. If we can get a break above or below this range, I'll be looking for the continuation trade. Or if we fail to break away from the inside day range, then I'll look for the reversion trade and potentially the opposite directional trade. So Friday we had a neutral center day. So we tested both sides of IB. Spent a lot of time actually below IB low on Friday, but ultimately did recover and settle back inside on a fairly balanced day. I think the big thing, the early sign of strength or weakness, I think we could easily use 67 or 69 70s. So obviously big pivots are Friday's high, Friday's low. But I think the early sign of any strength or weakness would be how we're trading basically in the bottom part of last week's value, in the bottom part of this LVN, as well as these two HVNs down here, and if there's any acceptance above 69 70s. So you can see basically the entire day last week, we weren't able really to print much above the previous week's high. So we were basically pinned under the previous week's high the entire day. Every time we got up there, there was just no follow-up buying pretty much the entire day. It wasn't really a presence of strong selling. It was just no real initiation above it. We tested above once, and it got met on the offer pretty much immediately. And again, there's just no continuation buying. There was no interest in trying to get above 69.70. So I think the early sign of strength is if we can start printing above 69.70 and we start getting some decent volume put above this, then I think obviously the move will be to the inside day highs at 69.90s. And if we break away from 69.90s, I'd basically expect us to come back up here and retest the all-time highs in the RTH session, back up into 7,030s, which is also balance high, and then fix this all-time high, which was set in the extended trading hours at 43s and potentially continue. The flip side of this is that if we start offering below 69.50, so last week's value area low, as well as the previous week's value area high, essentially, again, I think that the ability to sustain this framing of value higher might be limited, and we could see we would likely see the move down into the inside day lows, clear out these equal lows down here as well. This is the ETH low, RTH low. We'd clear out these equal lows down into 69.20s. So below 50s, I'll look for 20s, and then if we aren't able to bid this, we aren't able to bid 69.20s, then last week's low, the daily balance low, currently down into 68.95s, is a very easy target. So I think weakness really would be getting pinned under 69.50s, and strength early would be able to accept over 69.70s and basically playing the extremes of that prior day range and then seeing if we break away from this inside day. In the event that we start losing Friday's low, so if we start losing 69.20s, the bottom of current balance getting tested at 68.90s, as well as the 50-day moving average down here at 68.80s is extremely likely, in my opinion. Whether or not we can form a low down here, so whether or not we can hold up down here, is yet to be seen, obviously. But if we don't, if we start losing last week's low, RTH low, down in here at 68.90s, then we have a naked POC down into 68.50s, which is yet to be touched, and we have the bottom of weekly balance down into 68.20s. So below 80s, I really don't think there's going to be anything until we at least clear the POC at 50s and potentially even test the bottom of balance at 68.20s. So we'll have to see. We'll have to see if this, how this shapes out. Because we do have NFP, because we do have some significant earnings. Obviously, we had a big liquidation on Microsoft. Meta flew, but Meta's into a huge area of overhead resistance, so Meta could easily consolidate, could potentially drag us down a little bit. Tech has been lagging. Tech is really what needs to go in order for this market to actually get some legs to the upside. So looking at the NASDAQ, again, This is a nasty pattern. If I'm just looking at this as like a pattern trader perspective, like this looks like we should continue a lot lower in my opinion. But that's just purely looking at, looking at the surface level of this. So I think the same thing is true for me on the NASDAQ here. Obviously we had an inside day as well. NASDAQ has a poor low, which is a difference. So we closed outside of IB, we closed below IBL into the lows on Friday. We have an inside day, and I think the likelihood of exploring down into 25,500s is very likely. So all of this consolidation, the bottom of this liquidation day, this poor low, the 50-day simple moving average down here, 25,500s, I think is going to be a magnet, I would say. I think it's very likely we at least see this. Obviously, 600 down into 500 could be a decent range. I don't know whether or not, there'll be a trade that sets up for me to actually get that. We could see it in Globex. We could see it, right away at open. I don't really know. But again, I want to play how this inside day breaks. So if we start losing the lows, if we start losing the 25,500s level, again, it's the same thing down into 25,200s. We have a naked POC down into here. This is also the prior monthly balance mid pivot, which is very important, at least for the way I'm looking at this market. So I think below Friday's low, or below last week's low, I guess you could even say the RTH low, because ETH low is down here. Coming back into the ATH low, coming back into 25,200s, I think is very likely. I think you'd probably see a pretty fast move down into 25,200s below last week's low. That would be my guess, because there really wasn't a lot of, even Friday, there really wasn't a lot of interest in lifting this market. So going to be the same idea really around last week's POC. If we start being able to bid above, so if we recover this, we start being able to bid above 25,800s, and we start being able to get away from last week's range, or pardon me, last Friday's range on the highs, then I think coming back up into this distribution up here is very likely. Retesting all-time highs and current balance highs on the monthly is very likely. And we'll start getting back up into 26,300. And we also have an ETH all-time high at 26,400. This would probably be a situation where you have to see all tech names really recover and rip. You'd want to see chips start to catch a bid. Maybe that happens with AMD earnings. Who knows? You'd want to see, obviously, Microsoft start to catch a bid after that huge liquidation day. You want to see Meta hold up. You want to see the mags basically hold up. You want to see rotation, not leave tech constantly. And you want to see that start to really form a base and really be able to hold. Early strength and weakness, I think, can really be obvious when you're looking at the NASDAQ. So if we start seeing those names start to pick up some momentum, then we could easily see this market try and catch a bid and try to continue higher and keep framing value on a weekly basis higher. So NASDAQ looks tough to me. I have some issues with, just at a higher level looking at this, the fact that we're still not able really to close a week above the 26K level kind of says a lot to me. We've had blues, so I've had blues fire basically on every single new high that we've made on this market, and then we've had a protracted period of consolidation and liquidation. Same thing happened. Basically, there's immediate liquidation in this period, but it's just been tough. It's been tough to find buyers up there. It could be the same old story. We could easily start to push back down back into the current lows. We have an unfilled sell gap at 24,950s. There's a lot that could still happen here. So I think as far as just being open to either side of this trade and just looking at how Friday's inside day breaks, and if we have continuation or lack thereof, can tell you a lot early on how this market probably wants to be positioned this week. And then obviously take into consideration on Wednesday, Thursday, Friday, the fact that we have big earnings after hours, which could be market drivers, as well as NFP, which could impact short-term direction on this market. So hopefully that makes sense. If it does, if you find the video helpful, leave a like, subscribe to the channel if you already haven't. Leave any comments, questions or comments down below. I appreciate your time. Thanks very much.